Hey, you guys, welcome to the Rachel Cruze Show. All right, have you ever gotten a big fat tax refund in the mail and you celebrated? You're like, this free money. You went and bought some wine or went out to dinner, bought some new clothes. It just feels like this huge bonus. Well, guess what? It's not. A tax refund is not a bonus because it was your money to begin with. A tax refund just means that you've been loaning the government your money interest-free throughout the year, and now they're returning your money to you because it's yours. In 2021, according to the IRS, 70% of taxpayers received a tax refund of $2,873 on average. So a $2,873 refund means that you could have had an additional $239 in your paycheck every single month. So what exactly could you do with that extra cash? Well, you could turn that extra cash into $1 million. You ready? Say you're 30 years old, okay? And you want to retire at 67, and you invest that $239 a month in a mutual fund with 10% annual return. Well, in 5 years, that will be worth $18,507. In 10 years, that will be worth $48,957. In 20 years, it will be worth $181,489. And in 37 years, the year you want to retire, that now will be worth $1,113,699 from that one tax refund, you guys. Is that not unbelievable? That is the magic of compound interest. So what happens when you let the government hold on to your money until July? Nothing happens. So getting that money back in your hands is so crucial. And think about what else you could do. You could knock out all your money goals so much faster. You could pay off debt, whether it's credit cards or car payments or student loans. You could add, again, $2,800 to your debt snowball throughout the year. That's a huge difference. You can build up your emergency fund so much sooner. Your 3 to 6 months of expenses could be saved up faster so that you can start investing into retirement. You can make extra payments on your mortgage and save thousands of dollars of interest over the life of your loan. There are so many options for that money to be used for your own good versus sitting in Washington. So how do you take control of your money in this situation? Well, if your tax refund is more than $200 a month, you want to get help from a tax pro or your HR department to adjust your withholdings. So a tax withholding is just a chunk of money your employer sets aside from each paycheck to cover your taxes. Now, if you withhold too much, then you get a tax refund, just like we talked about, not good. But if you withhold too little, then the IRS sends you a bill because you still owe them money. And that's not great either. So kind of the goal is to get to close as $0 as possible. So the first thing you want to do, step one, is calculate your expected tax withholding for the year by finding the amount of federal income tax withhold from your paycheck stub. Then let's say that's, for example, is $350. We're going to multiply that by the number of pay periods per year. So $350 times 24 is $8,400. You can do the same thing for your spouse if you guys are married, filing jointly, and just add those together. Step two, estimate your tax liability or how much you'll owe. So the IRS provides worksheets and a calculator to walk you through this whole process. It's kind of like completing a pretend tax return. And let's say you're single and your taxable income was $50,000. Well, that puts you at a 22% tax bracket and you will owe $6,860. Step three, subtract your estimated tax liability from your tax withholding. So if you're in the black, then you'll get a refund. So again, our examples were $8,400 that your employer is keeping for taxes, minus what you owe is $6,860. So that means $1,540 is being held in your taxes that didn't need to be held. Now, if you're in the red, again, you're gonna have to pay the IRS. So if those numbers were switched for some reason and you owed $1,500, you have to pay that before tax time or there is a penalty. Step four, file a new W-4 with your employer to adjust your withholding. If you're getting a big refund, then you want to withhold less. If you owe a lot of money, you may want to withhold more. All right, one last tip. File your taxes sooner than later. You'll have the opportunity to make sure that you're claiming all of your tax deductions and credits you're eligible for. And you can take this time to make sure your documentation is correct, make sure that you're claiming the standard deduction that you need. Early filers with a tax bill actually have time to plan and save up money that they owe the IRS. And if you are facing a bill instead of a refund, I understand the urge of just wanting to put it off. But listen, file your taxes and you don't have to pay in full until tax day. The more time you have to come up with the money, the less likely you are to bust your budget or to drain your emergency funds. It's hard to get a really great tax pro and get on their schedule during crunch time, and some tax pros even raise their rates as tax deadlines get closer, so watch out for that. And if you get stuck along the way, get help from a tax advisor. Look for a Ramsey-endorsed local provider or use Ramsey Smart Tax and let us take a little bit of the stress off your shoulders. So you can go to ramseysolutions.com/smarttax to learn more. I know taxes are not the most exciting thing in the world. In fact, a lot of people dread them. But listen, doing them wisely, again, getting to that zero where you don't owe a ton, but you're not getting a big refund is going to help you. Tax refunds, it's not a bonus. It's your money that you could be putting to good use throughout the year. So you may want to change what's going on with your taxes and what's being withheld in your paycheck to help you out. Because remember, I want you to take control of your money and create a life you love.